And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It is time for the forecast for Tuesday, September the 27th. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus is on seeking accurate context. Not always the easiest thing to find, but also focusing on good risk management and staying patient in our trading today. Speaking of staying patient, today's the National Day of Forgiveness. I was always told that forgiveness is for us, not for them. So forgive yourself and forgive others. Let go of that venom, ladies and gentlemen. It's not going to help you. It's only going to hurt. So, National Day of Forgiveness. It's quite a good day, I think. As far as economic numbers this morning, we've had a few talking Feds this morning already speaking. Powell already spoke this morning, from what I understand. I didn't watch it, haven't checked it out, but it was about digital currency. This morning, durable goods orders came out. Talking heads already discussing that it's the second retraction in durable goods for the second month in a row. We have 8 o'clock, just in a few minutes here. We've got the Case-Shiller and FHFA home price indices coming out, 9 o'clock consumer confidence, and new home sales during Make Hoag Money. So I sat down this morning, and I looked at the quote board, and everything was green. Everything was green. So it was kind of a shocker this morning. We've got equities higher, we've got treasuries higher, we've got commodities higher, we've got currencies higher, cryptos higher, metals all positive this morning. It was kind of a shocker when I sat down this morning. News around town is that the Dow closed more than 20% off its all-time high yesterday, indicating the beginning of a bear market, at least for the Dow. We know that the S&P and the NASDAQ have already danced in those areas, and the NASDAQ is holding well below those levels. So we always have our tasks set out for us. Make sure you're prepared today. You've done your homework. You've established your hypotheses as to what you think is going to go on in the markets today. You've attached the correct strategy to those hypotheses. And, well, for nothing else, come join me for Make Hoag Money. You'll be able to use those hypotheses and ideas to help make me money. Here is the link to get the link for Make Hoag Money if you want to join us in the Zoom meeting. We'll look forward to seeing you there. You can actually vote and discuss the trades in the Zoom meeting, or you can watch it on YouTube. It's up to you. No big deal. Try and keep an eye on the chat in both the Zoom meeting and on Zoom, and in the YouTube meeting. So we'll see you there, hopefully. All right. VIX this morning is down about 4%, just above 30 at 30.92. The dollar index lower, about a point off its high that was put in yesterday, 113.66, the current level, and the yield on the 10-year continues to leak higher, though it's a little bit lower this morning at 3.8%. As always, we're looking for ideas, feedback, and constructive criticism on everything we do here at Top Step. That includes the market forecast. So if you like what you see, hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Hit the subscription for our YouTube channel so you can get notified whenever we do go live. And if there's something that I'm missing, something I can do better, something we can do better, tell me. You like it? Tell everybody. You don't like it? Tell me. jhoagland@topstep.com. What was I going to say? I had something, and then I started on something else, and I lost it. It happens quite a bit at my age. What was it going to tell you? What was I going to tell you? No, I don't know. I'll figure it out. Shaw Cunningham, first in the room this morning. It's good to see you this morning. Tachyon, JST Wave. Caprice, good morning. Dark Kevin, a little rough morning, I guess, in natural gas. Ron Merlot, good morning. Jules, the Scarlet Arachnid, the Red Spiders here. Haggle Matters, good morning. Ray, it's good to see you. Rusty Golfer, Serenity Traders here. Buenos dias. Patrick Elijah, good morning. You have a profitable day as well, Elijah. My guy John Doherty's here. You're going to see a little more of John Doherty tomorrow. I'm not going to be here tomorrow. John Doherty's going to be handling the market forecast for us tomorrow morning. I know everybody's always excited to see the big guy, JD. Three Lions, Glitter Sandwich, the Rooster, good morning. Marcelo, Chris, Eric Hill, good morning. Let's go get that money. Ricardo, Trading Research. Ray has forgiven me. Thank you very much, Ray. I appreciate that. Mike H., because Ray, unlike a lot of people that you might be mad at, I actually care. But I know you're not mad at me. Mike H., Jan, good to see you. Unicus with his quote for the day. I love these. To be prepared against surprises is to be trained. To be prepared for surprises is to be educated. To be prepared against surprises is to be trained. To be prepared for surprises is to be educated. Another great quote for us this morning, Unicus. Sarah Hall, good morning. Prayers and love to you as well. Dario. Terry King. Vince, good morning, sir. Dan Trader, too humble. Let's get to the charts. You got it. No problem. Mert, good morning. Stephen, Ori, and Dan Trader. Joe, good morning. And Jay, good morning to everybody. All right, we're going to get to the charts so we can get to Make Hogue Money. And here we go, starting with the daily in the S&Ps. So we've got a little bit of a pullback here, it looks like. We still had some decent volume on this push to the downside. We tested to last week's low. We were unable to accept down below that yesterday. We've got an inside extended trading hours today. Yesterday we did have lower volume in New York, but a little bit higher volume in futures, and we added 39,000 in open interest, which would indicate that we still see sellers coming into this market, adding new positions to the short side. When the market moves lower and we add open interest, it adds new shorts to the marketplace. One of the things I'm going to show you is the delta for the last three sessions has been positive while price has been moving lower. That's an indication of longer time frame traders adjusting inventory, either getting out of longs or getting into shorts. And I'm going with getting into shorts with the increase in open interest. Last week's low, supportive. Who are the sellers that we've been seeing in this move to the downside? Well, here's the 30-minute chart. We've got positive delta here. By the end of the session, we were looking at about 8,000. Positive delta here as the market continues to try and push lower. We end the day with positive delta of, let's call it 20,000, something like that. And then yesterday, we have positive delta at the end of the day of 13,000. Whoops, let me do this. Of 13,000. So while we see the price continuing to try and push lower, it was lower on Friday. The value was lower yesterday. The market is still continuing to try to go lower. How good of a job is it doing? Well, the volume hasn't been bad, and it's been increasing in open interest. But it hasn't been very momentous. There hasn't been a lot of momentum to the downside. So with this positive delta, it indicates to me that the longer time frame traders that are accumulating this open interest that we've seen for the last couple of sessions here. On Friday, we added 35,000 in open interest. Yesterday, on an attempted move to the downside, we added another 39,000 in open interest. So somebody is accumulating a position, and it looks like it's to the short side. It's the short time frame buyers that are accumulating the delta that is kind of incongruent with the attempted direction of the market. Right now, those short time frame buyers yesterday that probably capitulated a little bit into the close are currently getting paid. We've got overnight longs here. So if the longer time frame sellers are funds and banks, they're not necessarily going to be taking losses on this because they're going to be hedged in everything else that they're doing. What I'm very interested in is seeing how long they stick around, how long they can get the short time frame traders, and how much pressure they can keep on this market and on those long, short time frame traders, the shorter, weaker hands traders that are likely holding long positions now, and how long they can keep the pressure on them. So yesterday's high is going to be extremely important, and Friday's high also. We have a gap that we left from Thursday to Friday, which remains unclosed in the S&Ps, but we closed it in the NASDAQ. NASDAQ is a whole different story. So do we have the short time frame longs on their heels? There has been no capitulation, maybe a little bit of an adjustment into the close yesterday that pushed the market lower. What I was really looking for yesterday was the longer time frame sellers to get the short time frame traders so long that they created a late spike to the downside. I didn't get what I wanted. What does it mean? What didn't happen? We didn't get the late spike. What doesn't happen is sometimes as important as what does. So it's an indication that we're rejecting lower pricing. We have excess at the lows. We do have a little bit of excess at the lows. We're kind of in 2 days of balance here. And in this 2 days of balance, I'm looking at the shorter time frame traders, especially yesterday, holding long positions. Right now, they're comfortable. Settlements all the way down here, 36.70. 36.70. So we've got a whole bunch of overnight longs now adding to this short time frame long position. If they can't get paid, are they going to get nervous? Are they going to bring price back down to the low? Are we going to see the longer time frame traders continuing to press into this level, increasing their shorts? If that's the case, then we may see our short time frame traders who are holding long positions getting too long, and that might be what would push the market lower at some point. So watch Delta. If you can watch Delta today, if we see Delta positive against direction to the downside, that's the long time frame traders keeping the heat on the short time frame longs. It's going to be an interesting trading day, and I'm looking forward to seeing how this day plays out and seeing everybody on the recap. Because all of this can be wrecked by just one comment, one good thing, one bad thing coming out economically. The extremes of this balance are going to be very important. Last week's low, and let's call it Friday's high, relatively close enough to yesterday's high. Excuse me. Here's the crude oil. Crude oil volume and open interest losses on the push to the downside yesterday. So it might be kind of time for a little bit of a pullback, and it looks like we're getting our little bit of a pullback. Now, don't forget, we have a hurricane coming into the Gulf. A lot of oil rigs they've abandoned them. They're not currently working, so there may be a little bit of a supply hiccup here in crude oil. It's nothing that anybody's really talking about. It's just always on my mind whenever there's a hurricane in the Gulf. So maybe with the loss of volume yesterday, and we lost 3,000 in open interest, it's an indication that this push to the downside, while it's still healthy and intact, may be time for a little bit of a break. I'm going to be monitoring for balance and inventory adjustments inside of that balance. Right now, we're inside extended trading hour and regular trading hour range in crude oil. Here's the 30-minute. Now, we're not necessarily inside extended regular trading hours. We did look a little bit below in the overnight, but we are holding overnight longs. We are inside the area of value, and we are inside an area that bodes for potential repair. What's repair? Well, let's look at the TPO chart. So yesterday we had a double distribution trend day to the downside. We had a distribution of time and volume here. We had a distribution of time and volume here. We just opened in the hole between those. When we do that, there seems to be a tendency or a probability that the market can come down, check this high volume node and this high volume node, this high time node and this high time node. We do have a very weak low, indicating the potential for an unfinished downside auction. This is a very weak low. There's no excess here. Market just looks like it got too short late in the day, and we just kind of recovered some of those shorts. I'll be very interested to see if we see some extension down below that level. But initially, because we're in range, because we're in value, because we are in the area of repair, my focus initially is going to be up here on this high volume node and down here on this high volume node. I'm not going to be looking for anything very early in this session today in crude oil because, again, we are opening kind of boating for repair. I'm looking to see if we've got an opening range trade here, which our low 77.74, our high 78.35. So we're looking at a 60 tick opening range. I'm not playing with that, especially right in the middle of the value area from yesterday. Value in the red here. Here we are, right in the area that bodes for repair, right at last week's low. Nah, not going to do it. I'm going to be patient and look for better trade locations as the day goes on. Now, it's been a while since we talked about the S&Ps, and this is the NASDAQ, and they are, of course, two different animals. And they are acting like two different animals. We're kind of like kids. You're going to have 3-4 kids, and all of them has their own personality. They all look the same. They all came from the same place. They're all related, but they have different personalities, and it's so true about the NASDAQ. So volume was good on the way down yesterday, but we've only added 300 in open interest yesterday and today. Where is the open interest as this market continues to push lower? We're not seeing it in the S&Ps where we are, we're not seeing it in the NASDAQ where we are in the S&Ps. We've only added 600 in open interest in the last two sessions, or we've added like 60,000 more than that in the S&Ps in open interest on the downside. Yesterday, we had no test of the weekly kick of last week's low. What doesn't happen is as important as what does happen. These last two sessions attempts to the downside seem hollow because there's no increase in open interest. There's no money coming into the short side in these moves. It's either just kind of longs getting out, whatever it is. There's no indication that we've got traders interested in getting short at this level. So here's the 30. We noticed yesterday, even before the open, we started putting in higher lows and higher highs. We never did get the test of last week's low where we did in the S&Ps. We've even closed the gap, which we have not done in the S&Ps. Now we've got overnight longs. There's no real indication we did have positive delta in the NASDAQ yesterday, but nothing tremendous. No real indication of longer time frame participation here in the NASDAQ. So we got to treat it. You got to trade it like it's its own animal. Don't base anything off the S&Ps here in the NASDAQ. Trade what you're seeing. We got a lot of longs in the overnight. If we can't take out the overnight high or yesterday's high, that may be enough to scare some of these overnight longs to get out and give us a better opportunity for a long if that's what our hypothesis is. It appears as though this might be starting to create a bear flag. So what I'm going to do here is I'm going to put a trend line on the bottom of this bear flag. We've got a couple of points of contact here. And I'm going to leave this here. And we'll see if this bear flag breaks out to the downside anytime soon. Later on, I'll put a trend line across the top here, but I just don't want to waste our time. Take a look at gold now. Okay, gold structure is good to the downside. I mean, volume is lower. Open interest is lower yesterday. Lower volume. We lost 800 in open interest. It appears as though this downside auction is preparing to take a bit of a break. We are in the middle of space, in essence. There's a lot of space down here. The downside structure, of course, does remain intact. Here's the 30-minute. Okay. Overnight inventory long, inside value patience, potential repair of a double distribution trend day. Here's the point. Here's the TPO chart from yesterday. Time and volume, no time and volume, time and volume. Before the market, actually closed, we did set up a little bit of time down here. When we opened where? In the middle. So my focus initially for opportunities when this happens is the point of control of this upper distribution and a point of control of this lower distribution. I'm not interested in doing anything in between. It's going to be a Golden Graham's Day, ladies and gentlemen. Here's the euro, which is in a very similar situation. We've got volume, great yesterday, added 2,500. Okay, now we're seeing some continuation probability here. The downside auction appears to be healthy. We do have an inside extended trading hour range so far this morning. Here's the 30-minute chart. Settlement is down here. We don't really have any overnight inventory with which to deal with. And we've set ourselves up for a potential repair day. Take a look at the profile. Distribution, no distribution, distribution. Opening between them, it looks like there's been an attempt to get to this high volume area or a point of control. Looks like we're attempting to get to this high volume area or point of control. But these are the areas I'm going to focus on for opportunities today. All right, so let's take a look at the 10-year and the nat gas, and we'll be ready for Make Hogue Money. The 10-year, we had some volume slowing on the push to the downside yesterday. We still added 23,000 in open interest. The auction to the downside obviously appears healthy. This market has been needing a pullback, and it looks like that pullback is happening today. Here's the 30. Settlement down here, 111.11 and a half ticks. We opened below weekly kickoff low after testing it in the overnight. But again, we've got kind of a possible repair type situation. We opened in the area of low volume, little time. Now, we didn't get up there. Maybe we're going to head down here first. But again, it tells me I got to be patient and look for better trade locations as the day goes on. The probability of one extreme of the initial balance remaining one extreme is lower on days with this type of situation. Here's the nat gas. We saw volume slow yesterday. Now we're still dealing with the end of rollover. We added 1,300 in open interest on an overlapping to lower day. Maybe we're starting to form a little bit of a bear flag here. Take a look at the 30. Because we've got, higher low, higher highs, no real higher low yet. We'll see how this plays out. But we had some overnight longs that kind of capitulated or reconciled even before the open. We're back in range and value. Stay chill today. Or at least early in this session for the nat gas. Now, there's a lot of information that we just went through, and I apologize if it's too much. just so much to talk about. Certain days there's a lot to talk about, and some days not so much. Will Nat Gas will love these hurricanes also? Yes, we'll have to see. It depends on how they land and where they hit landfall. October is usually the bear market killer historically. Oh yeah, sometimes that is true. The delta changes because of the quarter ending and institutions adjusting. Very well could be. Haggle matters. But when we think about what our role is in trading, is we're here to help the bigger traders be able to execute large amounts of orders without moving the price much. So when I think about trading, I think about actually trying to pit time frame against time frame. I want to know where my time frame is getting too long or too short, and sometimes understanding what the longer time frame is doing. Even if they're just getting out of positions or whatever it is, they can trade so much that they get our time frame too long or too short. And when that happens, that's when you get some really good opportunities in the opposite direction, if you will. All right. Yeah, gonna be patient, and yes, indeed, excellent. Never diddle in the middle, right? Joe, I don't know what to tell you about that. Hang on a second. What I'm going to do is I'm going to give you the Zoom link to register. I don't know if I should be doing this, but I don't want you to miss it if you want to be there. All right, here is the actual Zoom link to register for Make Hope Money, and I look forward to seeing you there. Joshua, will we make you money today? Well, Joshua, we have to see about that. Well, let's get over there and see what happens. We've got about 5 minutes. I'm going to get there's the link, Joshua, for Make Hope Money. Just register, and I will be there in about 5 minutes. Try and get things open up, running, and start discussing by 8:20, so we can check out the E-mini S&P or the micro open. Let's take our deep breath. We are going to stay humble, grateful, and creative in our trading today. If I don't see you for Make Hope Money, maybe I'll see you for Coach's Playbook or the recap. But either way, looking forward to your success. Have a great trading day. Get out there and profit and trade well today. We'll see you in a few.